things that we have, which are accounts like online, we're being viewed online now. People have online accounts. Some of them are in banking industries. Some of them are, they're holding assets. You know, you may have might do a little dealing in the stock market. Who knows what you do, but you do know, and this is your opportunity to prepare all of those things so it is clear, and you won't have to air your business among people that you don't want to know your business. Got it? Thank you for volunteering. All right. So, I already have
television.
You all have the handouts that I provided. The ones online, you don't have it, so I will read a little bit of what I provided for them. And I will also give access after the presentation so that you may get your hands on it as well. The first thing is the definition of what is a will. It is a legal statement of a person's wishes concerning the disposal of that person's property after that person dies and passes away. It has a lot of purposes, and I just discussed a lot of them. It's to direct to whom you would like your assets to be distributed. It declares all of your wishes, not in speculative terms, but they're gonna be definite. Once it's written, it's written. It can be revised, but there is no question and there is no contesting what is written. Then it appoints someone who is gonna be the executor. This is a person who is gonna carry out the administrative functions of making sure that everything you asked and everything you left to whomever you left it to will be able to receive it, okay? Then it also it's a protective measure. It keeps your assets away from people who shouldn't have them. Because when you pass away and you don't have a will, you don't have a trust, you don't have any other codicil or legal protection, assets can end up in the hands of people that don't own them, and they can be obtained by the state. So we don't want to have that to happen to anyone else. So now I'll have my second volunteer. So are you my second one?
I can be.
Okay, come on. What's your name? I don't know your name.
Ruth.
Ruth? Nice to meet you, Ruth. You look so nice. Does she look nice? Like she is?
Good work there, Ruth.
That's a genuine compliment. She does. All right, so thank you for volunteering first. Okay, so first I'm gonna ask you a question. Ruth, are you single?
No.
You're not single. So are you married?
Yes.
You are married. Is this your first marriage?
Yes.
It is your first marriage, okay. Do you have children?
Yes.
Okay. Are they all your natural children, or do you have any adoptive children? Do you have any stepchildren?
Natural.
Natural children, okay. All right, so you're in this room, and I've asked you private questions very publicly, right?
Yes.
It may have felt like a little bit of a pressure, right? Who wants someone that they don't know to ask them who's personally in their life? I didn't ask you who your husband's name was or who your children are. However, when you are preparing for leaving here on the day that it could be your last day, but it's not, people need to know who are actually the people that should be a part of anything you really want them to be a part of. They need to know who your real heirs are. Real heirs. And heirs can be those that were naturally born to you. Heirs can be those that were not naturally born to you. You may have had an adoptive child. You may have had stepchildren. But these are heirs that you want to leave something to, right? So if no one knows these things, you haven't prepared, no one knows who your spouse is, because we live in a modern day society. It could be the fact that you're happily married and in bliss in heaven on earth. However, that's not always the case. You could be separated, you could be going through a divorce, but it has not been finalized. So the people who you actually are, want to leave your assets to, they are made known in these instruments, these legal instruments. So thank you for volunteering. You're looking a little I didn't wanna put you on a hot seat. But that is the hot seat, because we have a lot of mixed families. Anybody in here have a mixed family or blended family, or from a blend? You have one? Anybody else? You have one? You have one? Love is love, right?
Yes.
But as circumstances have it, sometimes we don't always know who's legitimately a child, who's illegitimately a child, and we don't know what child somebody really wants to give something to.
Amen.
You know, you may be the person, or you may have had someone who, your child, how many do you have? You have one child, blessed child. But if you had 2 children, right? And you really had, you had foreknowledge that this one child was a little bit more responsible than another child, right? Or if you knew you had children that weren't responsible at all, but you had a niece or a nephew, and this person needed to come into play and maybe become the executor or whatever. This is the purpose of this meeting, so that you can understand that there are people that need to be known, but not known where publicly. So the wills or trusts, they provide a way that the things that need to be known are known privately. Got it? All right, thank you for volunteering, Ruth. Looks like, what is she? So, going into the second section of the handout under wills and trusts, it shows you that there are checklists that you need to make. It says before you make or draft a will, you need to make a list of your assets and debts, and you need to list the beneficiaries and what they will receive, and you must decide on an executor. And so that was part of what I was asking Ruth, like, who would be your beneficiaries? Who are your real heirs? When I was speaking with Smitty, I was really asking him what you are gonna have to get a list of. What are your assets? What are your debts? What money do you have? Do you own shares, bonds, stocks, investments? Do you have interest in partnerships? What do you have? Do you have heirlooms, arts, paintings, things that people don't think are valuable, but they are? Do you have silver in your home? You know, what do you have? You need to think about all of these assets and make all of the lists when you're preparing to get your will drafted, okay? So, we spoke briefly about the beneficiaries. Also, if you have dependents, this section says by law your will must provide for your dependents. And we know that as a dependent, you have to be under a certain age, or you may have a person who's incapacitated, whose care you provide. So by law, your will must provide for your dependents after you die, even if you did not support them while you were alive, such as parents, grandparents, any children or spouse. Now we'll talk a little bit about the changes that can happen, because sometimes, like I said, life happens. Sometimes we marry, sometimes we remarry, and in many cases the act of marriage revokes a prior will. And some of you may have drafted a will, and you may have a will that's in place, but you may have gotten married again, but you didn't change or update your last will. So what it does is it revokes it, and as the addition of a spouse changes, the intent of the will can change. With the addition of a chief dependent, the entitlement of other beneficiaries will have to be altered. In the case where marriage is contemplated in the writing of the will is not revoked. A divorce is treated as if the divorced spouse predeceases the testator, and the testator is the one who owns the will. That is, the divorced spouse is no longer a beneficiary. Alright, so we can have a lot of different life events. We spoke about marriage, spoke about separation, spoke about divorce. You can also have the death of a dependent. You can also have changes in the ages of your children. They may have been dependent at one stage of life, but they're no longer dependent. When that happens, you need to update your will, because you're caring for them differently, because you may have listed someone that needs to be their guardian when they're a dependent age, okay? So you can make revisions to your will by actually having a whole new will drafted, or you can just add a codicil. This is just an extra document that adds on to what you have already drafted. It has to be same form. If it's typewritten, it should be typewritten again. It will have to be witnessed, and it will have to be signed, and it will have to be dated. Now, when you draft your will, you'll either type it on your own, or you may have an attorney or someone to draft it for you. But you will have to name an executor, right? Sometimes people name people who are legal representatives as executors. That's depending on the nature of their life and their business. Sometimes you name an executor that is a family member. Sometimes you name someone who's not a family member. The choice will be up to you. But before naming the executor in the final copy, you must meet with that person to confirm that he or she is going to fulfill his or her duties. And the will must be signed with 2 witnesses present. It must be initialed at the bottom of each page. And at the end of the will, you must have your date there. And when there is more than one will, this determines which will is actually still in effect. Alright, so we're gonna move on to trust. There's much more to talk about with the wills, but we're capable, don't prolong the time. So for my third volunteer, would you come up? You ready to take an oath? We're not gonna have to take one. I believe your name is Mr. Jones, is that correct? All right, so Mr. Jones, thank you for volunteering. Okay, so let's interview Mr. Jones a little bit. Mr. Jones, from the age of 18 to 30, did you work or did you own a business?
I work.
You worked. From the age of 30 to 60, did you work or did you own a business?
Both.
Both. All right, from the age of 60 to whatever age you are now, have you owned a business or have you worked?
Both.
Both. All right. So, I know that was a little uncomfortable, not because you're not a pleasant person, because I can tell you're pleasant, and I've seen you, and I even know someone else that you may know. But these are uncomfortable questions. The point of this is you don't want your private business being aired publicly. I didn't ask him where he worked. I didn't ask him what his business was, any of those things. But just knowing that someone is asking you those personal questions that doesn't know you, and they will have to elicit the right answer for them to help you, is all uncomfortable. The reason I asked him about whether or not he owned a business or whether or not he worked is because those are the ways that most people acquire their assets. That's the way that you're able to purchase things. Now, I must ask you a last question. Since you own both, have you done all of your retirement planning, and do you have a succession plan for your business?
Yes.
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 Y'all need to stand up. Standing ovation. Because that's the, thank you, you can have this. That's something that most people have not planned for. He's been in business, and he's been in business for a number of years. And a lot of times when you have, things come up, so it gives you a little bit of foreknowledge. A trust is a means of providing for the succession of business planning, and also for the care of people who you may want to care for, but you may need to care for them, not in the way of a will, but in the way of this, I have assets, I'm placing them in a place, and I'm gonna have someone who will be a trustee, and that person will be responsible for someone that you know you are already responsible for, or you might likely be responsible for. Also, you may have assets that you don't want to be handed over to someone if they're a dependent age, they haven't come into the age of majority, and they haven't checked off and made certain milestones. They haven't attained certain credentials, if you want them to have credentials, and they're not living a certain lifestyle. A trust is an arrangement. There are 3 parties in this arrangement. You have the settler, the the trustee and the beneficiary. Any person in here capable of being a beneficiary under a trust. Although you may not be the owner of the trust subject matter, the seller can be the beneficiary. Trustees are subject to qualifications. These are the persons that will carry out, the duties of the trust. Practically anyone can do this, but the seller usually chooses, and the person who's creating the trust is the seller. Although the trust is not void as a result of this omission. So you can actually create a trust, and you haven't designated a trustee. Alright? A trustee should be legally capable, competent, and willing in the execution of his or her duties. The rights of the beneficiary lie in the enjoyment of the trust property, not the ownership. So you have probably heard of a lot of people that have had trusts, because a lot of people who are wealthy, or children who are wealthy, dependents of wealthy people, they sometimes come into trust. But they're not the owner, and it causes disputes at times. But if you're a person who has a business, or if you have a lot of property, or you have a lot of assets, a trust is a great way to have a plan for the succession of your assets. And it can provide generational wealth. That means that you can have both a will in operation and a trust. If you have grandchildren, or you have extended family that you may want to do something for, if you wanna have a charitable trust, like you have public interest and you wanna leave assets for the beneficiary, benefit of other people in the public, you can also have a trust. Any person who is competent to hold and dispose of any legal interest in property is capable of creating a trust in respect to that property. That's anything you own can be placed inside of a trust. However, convicts and other persons restricted by law are also allowed to be settlers. Being of unsound mind does not always disqualify a potential seller. There are more powers and duties, and you can read a lot of that on your own, but I do wanna touch briefly on intestacy. Okay. The reason why I kept asking the questions, or framing the questions from what you own, what you own it, I wanna hear the word back. You own it, it's privately, you own things privately. You're in relationships privately. But if you don't have a will and you don't prepare a trust and you die without these things, you go into an estate, it's called intestacy. That's public, right? So if someone has to dispose of anything that you own, whether it's a truck or a home, your bank account, or anything like that, what it does is, if you die without a will, first you're declared intestate. At this point, the courts become involved.
Yep.
In the administration of the estate's assets. Administration just means carrying out, distributing it, whatever you want it to happen. But it won't be based on your wishes. It will be based and regulated by our laws. And so the statutes of your state will govern who receives what. You may have intended for your children to have a substantial amount of whatever your assets are, but if you die intestate, no one will know what your intention was. No one would care. And no one can argue that they were the best child, the most loyal child, the most dependable child, the person that helped all the time. None of that is gonna matter. Because when you die intestate, the court appoints an administrator to tend to your estate. Usually it's someone who is interested in the assets. They will petition the court to open an intestate estate. So the court will appoint this person. Distribution of the assets to beneficiaries could be delayed. Y'all know about people who are delayed in their distribution of assets. Sometimes they pass away and people need access to their accounts, not just for, personal reasons, but they really need to do things for funeral arrangements, and people don't have access. So it's very important not to die intestate.
Yeah.
Distribution of assets to beneficiaries could be delayed by administration procedures. Higher legal fees may be incurred, and the estate may be subject to needless taxation. Trusts and wills are also a tax tool. So otherwise, where your dependents or your beneficiaries may have to pay extra needless taxes or pay high representation fees, they would have to. All right, so, let's see. These are some special clauses that can be added to wills or to, the trust. If you wanna make alternate gift provisions, you can do that. If you wanna have gifts to infants, you can add that in. If you wanna add in funeral instructions, you can also add those things in. And it's the duty of the executor and not your spouse to carry out your funeral wishes or your funeral arrangement wishes. If you are the type that would like to give donations, organs, of different sort, you can do that also in your will. You can have a common disaster clause, so if you're married and both of you pass away at the same time because of a natural disaster, you can have a clause in your will that covers that type of event. Sample of that is, I give all of my property of every nature in kind to my wife, provided that she survives me for a period of time, okay? So, these are special clauses that can be included in wills. Sometimes people don't want, children who are raised in their household or legitimated. Legitimated is when a person is born outside of wedlock, right? But they have gone through the steps to legitimate their child through the court system. A lot of times people never do it. They just take care of the child, they honor the child, they acknowledge the child, but they haven't legitimated the child. Sometimes people have children that they haven't legitimated, and they're called illegitimate kids because that's the term that they're referred to. And sometimes people do not want illegitimate children to be a part of the estate. You can exclude illegitimate children. In most cases, illegitimate children have the same rights though as legitimate children when referred to as a whole. To exclude them, illegitimate children, from the rights of inheritance, you have to make specific reference to your wishes in your will. And also, you may have assets that you want to leave to someone, say a house, a boat, whatever. But in the event that that person passes away, maybe they're elderly, right? And they may pass away, but you may give them a life estate in that particular asset. And what that does is, it takes that asset back at the close of their life. It puts it back into your estate, and if you would like it to pass on to another individual, then another individual may be able to enjoy or be the beneficiary of that particular asset. So, I do wanna touch on the guardianships. When young children are involved, a guardian is usually appointed for the children in the case that both parents die. The guardian's approval should be obtained in advance, and circumstances such as the age of the guardian should be considered. So these are some of the high points of preparing for your wills and trusts. I can go a little bit more in detail into the trust. A lot of people do not use the trust, but it's a very great tool, especially if you're a landowner. You own a lot of land, you have a lot of property, having a trust is a very great thing to do, or have. So, I know we're reserving questions to the end. I hope you all have enjoyed my presentation. I hope it hasn't been boring.
No.
And I think the thing that I want you to remember is, you wanna have private disclosure. If you want private disclosure, use a will or trust. Alright? Alright?
Oh, stay there for a minute. We have, got to do Q&A. I'm gonna go with the first one from online, and then we'll round robin the room.
Okay.
Erica Gardner online asks, just for clarification, I can write my own will without an attorney, and it will be legally binding as long as it has 2 witnesses to sign. Is that correct?
You can draft your own will. You can draft your own will. And you can type it on your own. You can use a form, you can have another attorney, you can have an attorney to draft it. It is preferable if it is typewritten, but it can be printed if it's neat. However, whatever you do in the will, and however way you draft it, it must be consistent, right? So from page to page, all the way through the ending, you can draft your will. It does need to be signed in the presence of 2 witnesses, and these are 2 witnesses that are disinterested in your assets and disinterested in what you may have going on, and you have to be of sound disposing mind when your will is drafted. The date will be a qualifier of whether or not you were. See, you must initial the bottom of each page. The 2 witnesses should also sign the will, and at the end of the will, you must insert the date. So those are the basics. Yes.
It has to be notarized though.
In most states, it does have to be notarized, but it will not invalidate a will if it's not notarized.
Thank you. That question was from Erica Gardner. Alright, starting with Miss Odessa's table. You guys have any questions?
I don't have any questions.
I have one. Right here at this table, have you all prepared wills or trusts?
I've done my mom's for her. I created one for her
Okay.
and set it up with the executor and all of that, but I used the online, sample to do it. You know, how you can pay for it, it's legal something.
Yeah.
Yeah.
So, you know, I'm putting y'all in the hot seat.
We
It
have.
says, go ahead.
Yes, yeah, that's why we came.
Okay.
Thank you guys. This table? This one? You guys have any questions?
I know you brought up a statement, one of my clients, she kinda got upset, her mom got like 7 or 8 kids, but my client, she was raised in the house, but she's really, that's her mom, but she's a niece,
Oh,
and she like, Anthony, don't want to put me down as a niece, not as a child, and the wheels make you look good. So, you brought up the man and said you gotta be specific
Yes.
about who the child is.
Yes.
And
and it doesn't matter whether they are niece or not. You can leave, anyone can be a beneficiary of a will or a trust. Yeah.
So she's saying that she had to name her as a niece, not as a
Mhm.
child.
Yeah, but she's not.
Yeah.
So before we go to this table, another question from online, so I'm just going back and forth. From, a young lady by the name of Nene. Great information. How do you go about starting a trust?
Well, first, there are 3 different parts, and you have to know which asset you would like to be placed in the trust. And then you have to choose what type of trust you would like to have that asset be placed inside of. And you will have to designate who the beneficiary of the trust will be, as well as the trustee. There are many different types, and they're listed, back here. You have, let's see here. You have the charitable trust, it's one. You have a constructive trust, bear trust, executed trust, executory trust, express trust, illegal, implied, inter vivos, non-resulting, protecting, resulting, secret, special, spendthrift, spouse, and test. And the spendthrift one is really funny. But basically, it is the beneficiary cannot transfer future entitlement to income or capital. Those are the ones that people usually use for the ones that don't know how to spend their money. Right? But there are a lot of different types of trust, so you have to decide what type of trust is the type of trust that your asset actually needs to be placed inside of.
Okay, Renee, did that answer your question? And it was Renee. Alright, this table?
Yes, you mentioned something before, and I didn't quite understand. You said something about taxes, with wills and trust.
Yes, so every estate can be subject to tax if you die intestate, right? So your assets could be subject to certain taxes, and those taxes would be will have to be paid by the administrator of the estate or those that would be beneficiaries of the estate. But your home may have taxes, you know, any other assets that you have may have, you're gonna have to file like a last income tax as an individual. Your administrator will do that, or your executor, I have to do that. But it is a way to preserve, especially when you're transferring business and any assets. Like, you can give a gift, therefore it's not subject to a tax. You see what I mean? So a lot of it is, what is the asset considered for income tax purposes? And how is it distributed, and how is it granted, how is it given? Because those are all different actions. But the income tax laws, they are protective of certain transfers of assets. And you can give them up to a certain amount, depending on the current tax code. So that's how you escape taxes, or your beneficiaries.
Did that answer all the questions at this table?
Got one.
Okay.
Yeah, on an average, just roughly, what's the cost of preparing a will and a trust, roughly?
Okay, so it's always gonna be dependent upon the amount of assets that have to go inside of the wills and the trust. If it's a simple will, simple trust, you can get a flat fee for preparing that. If you have it's just my home, I have children, I may have a vehicle or two, I have this bank account, I need to make sure that that's taken care of, that's not very involved, right? However, if you have a lot of assets, you're gonna have to sit down and narrow down what you're actually leaving to people. Are you gonna distribute them by gifts before drafting the will, or do you want it all to be contained inside of the will? So if it's easy, it only takes a few hours, you can get a flat fee. If it's something more than a few hours, they're probably gonna put you on a retainer. You're gonna start out with whatever that flat fee is, and they're gonna deduct it. Most people have hourly fees, and they can start anywhere from $2.50 and go up per hour. So if they put you on a retainer because you have a lot of assets, and you pay a retainer of $1,500, and that's used up hourly at a rate of $2.50 to $4.50, depending on the attorney that you hire, then that's how that works. But someone may give you a flat fee of $800 or $1,000, or even less, depending on how simple it is to prepare your will and prepare your trust, because it's gonna be the responsibility of the person that drafts it to make sure that all of the names, the addresses, the actual property descriptions are accurate. You're gonna have to make sure that there are no liabilities, no encumbrances, if there are properties involved. So it depends on whether or not there's extra research and effort that has to go into the drafting of it. Yes.
And Mr. Smith?
Okay, yes, maybe, about, things that's listed in your home or whatever. Do you have to list all of those things? I mean, simple things like something may cost $10 or.
Okay, so you don't, but you know what your things are, and you know what they are, how they are valuable to other people. So a cup is a cup, right? But a cup is special to somebody. So if a cup is special to the people in your life, then that cup might need to be a part of what you're doing your will. That's a very, very simple, minute thing. A lot of things you can give people in advance. You can go ahead and give it to them, so there's no, question. I wanted that person to have this. It's small, it's simple, but the larger assets are those that are of value. The things like, if you have a tractor, you have like snow shoveler, I don't know. But big, nice things that has still value in them, but not necessarily, all of your personal effects as far as like your linen in your house, unless somebody really like that linen. Somebody digging that linen at home, you might want to list it, because they like your linen, you invested in it, it's nice. You have, I don't know, Egyptian cotton sheets, I don't know, but yeah.
Yeah, can you just give it outright, or do you have to
can
document
give it outright, and the thing about it is your will and your trust does not even have to be public at all. at all. If you know that you don't wanna stir stuff up before you pass away and there's already a little bit of contention among your people, it can be as private as private.
This table, then we'll come back around. This table, this one right here, y'all got any questions? No?
Let me just act, well, it's not a really, I guess it is a question. You know, you hear about people like leaving stuff to their pets and stuff, like, I mean, is that legitimate?
It is,
Okay.
because a lot of pets are, that's funny, they're kind of cared for as children. So if a person is at the level of life where they can provide for the care of that pet until if the pet continues to live after they pass away, a lot of times they will provide for them in the trust.
So when that pet died, what happened?
The trust, it has instructions.
Ms. Gladys has a
I'm telling you,
Now, this table, Ms. Gladys,
When it comes to a will and a trust, it is a difference in them, right?
yes,
So I was involved in this where someone left a will to some peoples, but to younger peoples, but they was probably 18 and 19 years old, and they had to probate it. So can you tell me a little bit about that? I mean, because that went into a little bit money or something. Because I thought when somebody leave your will, then it was just yours. It didn't have to be probated.
sometimes wills are contested.
So that's when probate come in, is when it's contested? That's the only time?
Mhm.
Really?
but trust cannot be contested, correct?
Anything can be contested.
But I thought they couldn't because it's not a person, you know, it's a,
Document.
People contest them.
okay.
So that's the only time when probate come in because somebody done contested?
No. Probate is just simply that the court has to help carry out the matter, basically. They're helping with the administration of.
And that's where the
what is
money,
involved.
the fee
And
come
when you
in.
have minor children, there could have been anything. It could have been that there wasn't a guardian that was appointed. It could have been a guardian that was not able to take the responsibility as a guardian or didn't want it. You know, so the specifics, facts of that matter, you have to know more,
Okay.
but sometimes, yes. Mhm.
Ma'am, do you have a question? Rico has a question.
Alright, what if you, have like family land,
Yes.
and now you try to put that in the will to leave to your children, how do you work that out?
Okay, so mostly family land is partitioned, right? So if yours hasn't been partitioned, that's the first step. So that means that there's a specific plot of that land that is designated for yours, or you may only have an interest. So it's better to get it down to the point where it's a specific area of land, and then that's how you would pass it on. But you also need to know what is governing the ownership of the land as it is. Like, is there a parent still involved? Is there are there only beneficiaries at this point? Are there only heirs? Is it heir property? Did the parents die intestate? All of these things matter before you're able to pass on that property properly. Mhm.
Great question. Billy or Miss Ruth, do you guys have a question?
He had my question.
Well, one thing I'm gonna say about a trust and will is that my father, when my grandmother passed away, she had one living child. And because she didn't have a trust in place, she had a house paid for. The state of Iowa took all her assets and said because of her debt and Medicaid, took all her assets. But if she had a will in place, it would have been her tax shelter, and her dad would have got something. And one thing about a will and trust is that that's actually how wealthy people transfer their money from generation to generation, like the Rockefellers, the Rothschild family. That's how they do that transfer from one generation to the next. And it's almost, in a lot of states, like I think in the Washington DC area, is like indefinitely. The state of Mississippi is up 300 years. And that's how a lot of people don't realize that a $500 investment can protect your assets and also guarantee your children, your grandchildren have something to start with.
I'm glad you said that, because that's exactly what I meant. I said generational wealth, and it plans for succession,
Yes.
which is who's gonna own it after you're not present. What's gonna happen to it when you're not present? That is a very real situation that occurs, cause another one that occurs is sometimes once you become elderly, there's an issue when you may have to go into nursing home, care facilities, and your assets are not already protected, you hadn't planned for any of that, because we're talking about wills and trusts, but there are other legal documents that can protect your assets even before you pass away, where nursing homes and other facilities don't have to
Because,
take on ownership of them.
because Medicare and Medicaid, they're ruthless. They will take all your assets. They'll take everything in your name, even your
But
clothes,
any
your back.
creditor can. So if you have a creditor, you die intestate, and you have assets, and the creditor properly files a petition or, notifies the court, hey, they have a legitimate, you have a legitimate debt with them, they can have their debt paid legitimately.
Right, or repossess something.
Or, yeah, if you die intestate. So these are things to consider as well. It's a way to protect your assets.
That was good.
So wouldn't that be nice though, frame of thought, if we was like, when you were 25 years old, you had $1 million trust at your fingertips? When you were 25 or 30? I mean, think about it though, I mean, beyond that, but think about
Thank y'all for being a good
this
audience.
conversation we're having right now, we could be having a conversation in Bahamas or
We
somewhere.
got another question.
Okay.
What if you make your kids
Mm-hmm.
a part, like a partner in your estate?
That's the whole point.
What I'm trying to say is, like they already own part of it already,
You can do that.
and when something happens, it just kind of
Goes over to them.
move over to them.
That's a good question, because that's another way that when you have accounts of different nature, like investments and things like that, sometimes you need a person who already is a signatory, even if they're not an active participant or a person who can actively, retrieve anything out of the account at the time, but you may have a person that's added on to your business accounts, whether they're in the banking industry or any other place. That way, a lot of people go ahead and add their heirs, onto their properties, like their actual real property, their homes, they go ahead and transfer title, Now, it's a benefit when you're elderly because your taxes on your property goes down.
Yeah.
And so, but it doesn't keep you from adding them also onto your deeds. So those are other parts of the inner workings of the planning, because it sounds simple, and it is simple, the drafting part is simple. But it's going through the assets and seeing, what do you want? How do you want this to work? And then we get the questions answered, and then we're able to carry out your wishes.
But that's the key.
If you have a very, volatile situation, you know it.
Yeah.
If you don't have one, and the people that you deal with are easy to get along with, they're helpful, you have kindness, the law of kindness on everybody lips.
Sometimes it doesn't bring
You
out
all can probably work a lot of things out in a name. But you don't wanna cause validity by bringing up matters, intense kind of situations. Cause these are really your.
I'm sorry, but sometimes we start discussing money, boy, it brings the worst out of people.
It can.
And so I hate to conclude this section, but I've got to for the sake of time. And then probably I'm gonna pass you my phone so you can answer the last question online in the chat.
Okay.
So now we'll have Pam and Regina come up. They hate speaking, but it's a very brief section, so if you guys just hang tight. They're gonna tell us about how the economy, is affecting your money.
Oh, I'm sorry.
They have good news for us.
I think there was an hour session, is that one? evening to everyone. So just talking about current economic conditions and how it affects you. And of course, we all know it's all about rates, the prime rate. And that's the interest rate the bank charges their best customers. In this instance, of course, best customers is just the ones who are the less credit risk. The federal funds rate currently is 5.25 to 5.50, and the prime rate is 8.50. So as a rule of thumb, the prime rate is basically 3% above what the federal funds rate is. So when the prime rate moves, when the Fed rate moves, then of course the prime rate moves. Like, kind of like, you move up, we move. So anyway, the impact of for banks, the impact of the prime rate is basically, it's impacting the small business loans, is impacting lines of credit, credit cards, car loans, and mortgage loans. So the lower rates generally are gonna favor consumers in lending, because if you have anytime the rates are lower, like you're gonna really, the consumers are really going out to get a loan for a car, a house, or whatever. The higher rates generally are gonna favor deposit accounts, because of course, if you have higher rates, you definitely want to put your money in savings and get those the better rates for deposit accounts. And prime rate, just kind of talk about prime rate history just slightly. Pre-COVID, the rate was like right at 4.25%. Currently, the rate is, like I said, at 8.5%. There were, the highest rate is reported to be 21.5%. So if we're looking at the rate being 8.5% now versus when it really was high, this is pretty good rate right now. But we're so used to the lower rates prior to COVID, so this seems like a really high rate to us. There were 2 times in history when the rate was at 3.25%. Does anyone tell me either of those times? 2 times, and it's been in the last 15 years.
Before 2008.
2008, what was going on?
2008, that's when the bubble busted.
That housing crisis and everything, yeah. And then when was the other time? It's recent, been recent. During COVID, yes. So those are the 2 times that the rate was 3.25%. So a lot of times people are asking, is it a good time to? So is it a good time to buy a vehicle? Well, it depends on who you are. It depends on what you have. So the disadvantages right now are that prices and rates are so high. The discounts are limited. So many brands are being purchased above the MSRP. So of course, whenever you're purchasing above the MSRP, it's gonna be hard to negotiate lower. So there's little negotiating power. The advantages are the trade-in values are strong. So the closeout models are available, and December is deemed the best month to buy a car. So in the market for a car, ho ho ho, it's December, so yeah, good Christmas gift. But like I said, usually it just really depends on the person, where they are with their finances, with their credit, what they can do, what they really need. So it's just up to you if it's a good time to buy a car. Is it a good time to buy a house? Well, pretty much the same thing. Disadvantages, again, the rates and the prices are high. The inventory is low, so there are fewer choices out there. And then people with lower rate mortgages are reluctant to sell, because if they have a low rate already, even if they're wanting to buy another house, they really don't want to let go of that low rate that they have in order to buy a house for a higher rate, and then they're going to have to pay a higher price for that house anyway. So that's a disadvantage. And the advantage is that the market is uncertain. So if you wanted to buy a house, rates could rise, or they could increase, or they could decrease. So demand is low, so you're not gonna have a whole lot of competition out there vying for the same house that you're buying for. But then if you do buy a house and rates decrease, you can actually refinance your mortgage. So again, you just kind of take into consideration what you really want right now. And then what about insurance? I had a conversation just the other day about insurance. So insurance costs are up, and if you guys have have been pricing insurance for your houses, for your cars, for whatever, you're gonna know that insurance is up. It's up 19% since 2022. Yeah. The factors that affect this are the inflation and supply chain costs, weather conditions, depending on where you live. Now, there are some insurance companies will tell you that it's not related to the weather, but it depending on where you live is related to the weather. Your credit worthiness, that goes into effect as well. And then there's also an increase in the cost of labor. For auto owners, increased car prices, accident repairs, medical costs, and your driving record go into that. And then for homeowners, inflation and its effects and increased housing prices. And also, like if you talk to an insurance company and your insurance is going up, it's just honestly, sometimes it's just gonna be inflation. That's just the cost of living, just being here. So, what is the, let me go back down. So what's to be expected? So the Federal Reserve open market meeting, there was one on December 1st. They actually have a session going on today and tomorrow as well. But the Fed Chairman Jerome Powell, they did not increase or decrease the rates in that meeting. The Federal Reserve, Mr. Powell said, the Federal Reserve is prepared to raise rates if it's deemed necessary. Inflation is declining, it's currently at 3%. The target rate is 2%. So if the spending and output growth remains slow overall, overall spending and output growth remains slow. But if there's a continued decline in inflation, it could trigger the lower rates. The outlook for 2024 is, again, inflation is slowly moving in the right direction. If it decreases, then rates are likely to fall. This will likely domino into more affordable lending for autos and houses, and then housing inventory will likely increase as well. What are the opportunities for consumers right now? Really just kind of elevate your mind, get yourself together, take advantage of the increased deposit rates. CDs are making a big comeback now, so I mean, if you look around, almost everybody's offering a CD at least for a rate of 5%, usually about 5 months or a little longer, maybe 5 to 9 months. Check your credit report because you want to make sure that everything is reported correctly on your credit report, and then also you want to check for fraudulent activity. And then just if you're in the market to buy a house, to buy a car, you're still looking at those rates right now. Just you can keep holding off, but just go ahead and start putting back money for a bigger down payment. So whenever the rates are favorable and you're ready to buy a house, then or a car, whatever you want to buy, then you're more ready to buy it.
Thank you, Pam.
Okay.
Okay.
You ain't gonna get away that easy.
We're way past out.
Oh.
Go ahead.
Yeah, can I ask it now?
Yes, sir. Yes, sir.
Yeah, back in the day, like when I was working and everything, the goal then was to always strive to live debt free.
Mm-hmm.
Is that also a goal now, or is it something else?
Now that's what I tell people. So I mean, honestly, if you can live debt free, it just really takes a whole lot of stress off your finances, your bottom line. So I would say always, strive to live debt free. Yes.
But one thing about it too, if you have, with interest rates rising, if you can put your money to a CD at 5% or 5% return, actually the high interest rate is really in your favor.
It is. Right, for deposits, right. That's what I said, the higher interest rate for deposit is in your favor. Not so much for lending, but again, I mean, if you look at it, the rate right now, it has been a lot higher, in the past, so, but of course, we're just used to that lower rate. So that's what I said, CDs right now, they're definitely making a comeback, that 5%. And there are some actually I looked at that are 5.7%, 5.75%, so, and usually they're like for 5 to 9 months, usually is what I'm seeing. So yeah, I mean, but still, you can actually just go ahead and, after that 9 months, that 5 months or 9 months is up, you can just actually redo it, so, yeah. Any more questions?
2023, we had bank failures, which scared everybody. We had, I think, 3 Silicon, First Republic, and I think it was Signature Bank. And so at the bank that I work at, of course, we got a lot of calls, people wanting to know, is my money safe? Is my money safe? Older people wanted to take that money out, put it under their mattress or their, wherever, you know, in a closet. So it was our job and our duty to actually, convince everybody that your money is safe. Don't pull it out. Leave it where it is. And I know with 3 failures back to back like that, that was very hard. But, the deposit side, like as Pam was stating, the rates, when the rates increase, that's the best time to deposit. And like as she said, you know, our rates right now, some rates are 5% for CDs. My thing is talk to your banker. That's what you need to do. Even though the rate may say 4.9, go and talk to your banker to see if you can get a better rate or a higher rate. It's all in the conversation that you have with your banker. And if you know your banker by name and you have that relationship with your banker, they might do something for you. I'm not saying they will, I'm not saying they won't, but you know, just talk to your banker about your money. Let them know what you're trying to do, maybe invest or CDs, savings accounts or whatever, to get an increase on your interest rate. Our deposits right now, or what I'm seeing, I'm just speaking that where I work, we're on a rise, actually increasing. So people will spend what they want to spend, people will save what they want to save, no matter the interest rate. If they want something, they're going to purchase it. So that's what we're seeing as well. So we do encourage you to deposit and take advantage of these higher interest rates if possible.
What bank you work at?
I work for Renaissance Bank. That's all I have. That's all I really want to say about the deposit side, because like I said, the rates of what they are right now, take advantage of those rates if you can. Take the money out from under your mattresses. And I know sometimes we have, let me just mention this as well because I'm dealing with this. Our older people, our customers, sometimes we don't make money on money because of that relationship. You thinking this banker is so good, they've been good to me, and they're only offering you 1.5%. That's not good.
Amen.
So, you know, shop around. It's okay to shop around. I'm not telling you to just leave your bank totally, but shop around and see what other banks are offering. That's always a good idea.
What's the minimum amount to open a CD?
On new money, I'm just talking, new money, 10,000.
Okay.
Is that any CD?
That's it, huh?
Is that any CD?
The CD is an IRA special. This is a special now. This is a special that we have. And I said 10,000 because on a 5-month, we have 4.93% interest rate with an APY of 5%. So, you know, if you have some extra, you know, and you wanna make a little bit more.
You said that was the minimum amount? Really?
And what's that interest rate again?
On a 5-month, 4.93, and APY is 5%.
Okay. Yeah, question. If you are a beneficiary if you are on the account with another individual, say in your family or anywhere, is that included in that, what's it now, 250 that's insured by the FDIC?
Yes.
Oh.
Now, let me reiterate on the CDs. This CD that I'm talking about is a special CD.
So you're just
Yeah,
talking about
like
that
have-
particular CD?
Yeah, I'm just
Would
talking
you,
about.
that's what I was trying to, I was thinking, was you just understanding the question? Okay.
These are the CD specials
Yes,
where you
okay.
do have that higher higher rate, which is
Yeah.
what you want.
Um,
That's why I said that.
Yeah.
Okay.
Okay.
How long can you go on a CD? How long can a CD go?
We have 5 months, it's just a range,
Yeah.
5 months to 35 months.
But it don't go for like years.
Well,
You can't leave it
two-
in one for like years.
3,
Yeah,
about 3 years.
35, yeah,
Like three.
Yeah,
yeah, 3 years.
just however long you wanna have it, yeah.
What if you have like grandkids or something like that, and you want to put a CD in there?
Some
Can you
banks,
leave it in there and just let it roll year after year after year for years?
there hasn't
You
been
can
a
do
bank
that
got
too,
sued
whenever,
by.
after it
doing
closes a
that.
certain point, you make money.
And so what about rent? If I come in there and try to get along, y'all turn me down? But if I come in there with a suit and tie on and probably white, you wouldn't turn him down. You would turn me down. Some banks do that. Am I right? Okay.
Yeah.
I'm just wondering.
And if you would, you can tell him you're gonna do that.
That's why the bank lost their lawsuit.
But we know some banks have done that. Right.
But that
That's
bank,
what I'm
that's
trying
why
to
the bank
get
lost
you.
their lawsuit,
Okay. They did have a lawsuit on
and they lost it. That bank lost that
it.
lawsuit.
Sure did, yep.
We would not.
I have a
I'm not
question
a
from
lender.
online. Regina, what are the cons of having a CD?
Well, it depends on what type of CD, actually.
Cause I guess the term,
Now,
how long?
if you, the CDs with a higher interest rate for a shorter period of time, I mean, you can earn $300 to $500 depending on the interest rate for that shorter period of time. Where you would have money if you didn't have that CD and this money is just sitting over here in the savings account earning 0.5%. You know, you wouldn't earn $300 in a year probably on that.
But you don't have access to that money during that period of time.
Exactly, you can't, don't touch the CD, if you have a CD, and you have it for 5 months or whatever, let it sit in there to turn. You wanna use money that you don't need.
Yeah, right.
The money that you don't, money that you can set aside and just let it sit and earn the interest that it needs to earn.
But the main thing, that money working for you, that's the
Yes.
main thing.
You want your money to work for you.
And then also some banks will, renew that.
Right. You do not have to, at the end, and that's another thing, I'm glad you mentioned that, at the end of the term, especially if you have a special CD, at the end of that term, sometimes they will work with you to allow you to keep that rate for an extended period of time, for the next maybe 7 months or whatever.
Or sometimes the rate will go up too.
Sometimes it will, and sometimes it doesn't.
And then, did you wanna cover counterfeit money?
Yes, one
being
other
controlled
thing
out?
that I do have, because 'tis the season for the fraudsters. Know your money, know what your money is supposed to look like. We are seeing just a little bit of counterfeit currency circulating. These are coming in deposits, any type of way. So I handed out, if you have your handout, these are just some things, and I wanted to go over just a little bit. But these are just some ways that you can know and understand, or just look at your money and know if it's a counterfeit. If you look at number 6, the Federal Reserve Indicators 2004 style, that number, if you look at the $100 bill, there's like a triangle around it, and it says A1. That number and letter, they coincide with each other. A is the first letter of the alphabet. So if you see a B, it should be B2, C, C3, D, D4. That's just an easy way you can look at a bill and see and tell if it's counterfeit or not. Counterfeiters are getting smart, so that's why I wanted to hand this out. There are features, there are watermarks, there are fibers, red and blue fibers. Now, I did not even realize it, that at the bottom of your bill, well, it's not at the bottom of your bill, but kind of like where the shirt below the neck, the bill has a ridge in it. I don't know if anybody ever noticed that, but you can touch it, it's like it's raised. Like the printing is raised on it. I didn't realize that until day, actually. So the touch and feel of the bill, you can tell. A lot of counterfeiters will make the paper so thick that you can really tell. It's very noticeable, but sometimes, you know, you don't notice it, you know. So just be careful. These are just some tips. Just be careful as you go throughout the holiday season, you know, looking at your money. Just know your money.
What happens if someone passed one to you and then I put it in the bank?
You feel it is real or counterfeit?
No, you won't get thrown in jail. You'll get questioned, but you will not get credit.
Oh.
We'll have to send that to,
So we'll just have to suffer that loss?
yes, it'll be sent to the Secret Service, U.S. Secret Service.
So it's best to use your card instead of money, you know?
Well, you can, either way, I mean, you know, you can, I'm not saying counterfeit currency is just widespread, but it is, you know, during this time of the year, it is there. But, you know, you think about it, you use your card, they can get that information as well. So, you know.
So best thing with counterfeit money, get something, go to McDonald's, ain't it? You go to McDonald's, and have some change with the counterfeit money, ain't it?
That's where you normally would get it in your change, if you're not careful. You'll get it in your change.
Do people ever get counterfeit money from the bank? Do people ever get counterfeit money from the bank?
Do we ever get?
No, do y'all give it out to people?
I will tell you, now, we have had people say they got it from the bank.
I know I've heard people say they got it from the bank.
But, let me just say this, we have had said, you know, they'll say they got it from the bank, but they know who'll make it right.
Okay.
So sometimes people say they got it from the bank,
So Renaissance ain't playing.
and they really didn't get it from the bank. I'm talking about any bank, that, I mean, you know, if that's your bank, they're gonna, you know, service you. But however, every bank, should have counterfeit detectors, whether it's the counterfeit on like a machine or a pen. Now, sometimes the pen is not accurate, but they can mark your bill, and if it turns dark, then it's counterfeit. If not, and normally the counterfeit pens do not work on any bill that's less or older than 1950. 1950 and older, they don't normally work on those bills. There's a purpose. Any other questions?
Well, you have done a great job, guys. This concludes the Finance Ministry Wills and Trust section. This concludes for the end of the year. I hope you guys really enjoyed it, and I hope you guys have a great day.